Hey traders, Raghee here, and in this recap video for Simpler Futures, we're going to talk about the Dow and some of the psychology that's at work right now in the market. So you're taking a look at the daily time frame of the Dow. You can see very similar patterns on the NQ and on the ES. So I'm going to give you a few hints as to what's going on psychologically, how we took advantage of it today, and how you can continue to watch this market into next week, and what are some of the other factors that are going to affect psychology for the next 3 to 4 sessions, actually. All right, so we see the sideways action, and it actually looked like early on today that we were going to have a pretty decent market as we saw the markets climb up a set of stairs, most especially pronounced on the 5-minute time frame. A few things. Whenever you are trading pre-market, Dow, S&P, NASDAQ, Nikkei, meaning anything before 9:30 a.m. Eastern. Just remember that once the bell rings between 9:30 and 10, you're going to have what's known as the clearing range psychology. The clearing is basically the first 30 minutes of the market after the Wall Street bell rings, and as the name suggests, they're literally clearing out pending orders, executing trades during this 30 minutes. It's particularly intense and oftentimes can involve a lot of volatility. So we saw that volatility on the clearing trigger a lot of weakness. I mean, take a look. There's the 9:30 bell. Within 10 minutes, we're actually just free falling down towards lows. But what lows? Well, this is where we take a look at a longer term time frame that can absorb the hourly price movement range. The way oftentimes we will select time frames to trade is based upon the HPMR, the hourly price movement range. And this is a very predictable number of points, pips, ticks that the market moves very, very often, and we can gauge exhaustion, volatility, support, and resistance by these hourly PMRs that repeat over and over and over again. So once the market sold off, we actually stepped up and said, hey, wait a minute, there's a Darvas box waiting down here. And if that box is waiting down here, we could have some support. And that support could offer us a very low risk buy. And that's exactly what we did. We took a look at the area between 21,770 and 21,755 with a stop on the other side. It was a 21.45 stop, and said, you know what, let's step up and keep an eye on that level. And that's exactly what we did after the sell-off and got a really nice bounce out of it up to 8.15. I'm keeping a really tight leash on these because with Jackson Hole coming up this weekend, central bankers get kind of this casual atmosphere to set the tone and themes for the remainder of the year. Central bankers right now, of course, setting the tone and theme for asset purchase reductions like the ECB, future rate hikes like the FOMC. And if you think that we're going to get clear sailing going into early next week, heads up, we could continue to see this kind of squeeze, literally this kind of consolidation going into next week, because next Friday is non-farm payroll. So what's the lesson here? Keep the trade short term. That will be what we continue to do in the chat room, and that will be what we continue to do at least probably till about ADP release on Wednesday. I'll see you in the next update.